Hello, welcome everyone. This is ModX Network Voices. My name's Ryan Smith. I'm joined by my partner, Ivan Rupnik. Ivan, like to say hello?
Hi, Ryan. Hi, everybody.
Thanks for coming again and appreciate our audience, a network of folks interested in industrialized construction, offsite construction. And in particular, we've been focusing on housing lately. We're fortunate today to have a colleague with us, Chris Herbert. Chris is Managing Director at Harvard Joint Center for Housing Studies. He's an economist by training and has been willing to come on and share a little bit about a topic that's near and dear to our hearts as we've been studying offsite construction in particular. I wrote it down here. What's behind rental affordability challenge? And then what are we going to do about it? So we'll talk about some offsite construction solutions as well. Anecdotally, I serve with Chris on the Ivory Innovations Advisory Board, and we get to see a lot of really great ideas around affordable housing, those that are related to offsite construction, and then also policy and finance potentials. So glad to have you, Chris. Thank you for coming. Appreciate it.
Thanks for the invitation. It's good to be with you both. So what I'll do is I'll share my screen, and I will go through a little bit of a talk. As you mentioned, I'm at the Joint Center for Housing Studies at Harvard, and one of the things we're known for is an annual report called the State of the Nation's Housing. And so I draw upon that and some kind of our data analysis to kind of paint a portrait of the state of rental affordability that'll lead into a good conversation, I think. So let me start by showing you the trends in the share of renters who are facing housing cost burdens. And by that, we refer to households who are typically spending more than 30% of their income on housing, with the understanding being if you do that, you don't have enough money left over for everything else. And we actually divide that into two categories: those with moderate burdens paying 30 to 50%, and those with severe burdens paying more than half their income for housing. And those folks are particularly going to be stressed. So what this chart is showing you is the share of renters over time, going back to 1960, who were cost burdened. And I think there's the one key fact here that you can see right between your eyes as you look at it is that share has been pretty consistently going up over time. It was only about 24% of renters were cost burdened in 1960. About half of those were severely burdened. It was up in the 70s, up in the 80s, up till 1990. The 1990s actually weren't a bad decade. We can talk about why in a little bit. But then after 2000, things got really bad really fast. So now by 2010, half of renters were cost burdened. More than 27% were severely burdened. And so we've come down a little bit back since then. But really what you see from this trend is just that this is a problem that has been growing over time, and just not, even if we make some progress at some points, we never gain back what we lost in the previous decade. So a growing problem. Other key fact here is when we break it down by income, if we look at who's mostly affected by this, looking at the left-hand side of this chart, you'll see people making under $25,000 a year. About 80% of those folks are cost burdened. About 2/3 of those are severely cost burdened. So this is a problem that is most significant among the poorest households. But the other key thing here is if you look at those other income groups, you can see that the share of households that are cost burdened has been rising most significantly among people making moderate incomes, $25,000 to $50,000 a year, even $50,000 to $75,000 a year. I've seen significant increases in cost burdens. And if you look at the right-hand side, that's showing you all households. You can see that story about things have been getting better since 2011 doesn't hold when you look at these things by income group. Now, if we break this down further and say, okay, so housing cost burdens are becoming more of a middle income problem. If we look at this by market, so here what we've done is taken the 100 largest markets in the US, divided them into three groups: the 25 most expensive, the 50 middle, and the 25 least expensive. And the most expensive ones are those ones shown in yellow. What you can see here is that at the bottom of the income distribution, I've used slightly different income categories here just to confuse you, but under $15,000, you can see it doesn't matter whether you're in a low-cost market or a high-cost market. You can be in Detroit or San Francisco. 80% of those renters are cost burdened. And so, and then as you move up $15,000 to $30,000, there's slight variation by market, but not much. So people who are of modest incomes are struggling to find housing that's affordable in every market. And I should say at these income levels, there really is going to be no substitute for how do we address this challenge other than through subsidies. if you do the math, what you're working at is people who are going to spend 30% of their income at these income levels are going to be able to spend $400, $500, $600 a month. And the private sector simply can't provide decent housing at that price point. Now, when we look at people making 30 to 45,000 and above, here you see stark differences by the cost of the market. And in high cost markets, very, very high shares of those making $30,000 to $45,000 a year, which is basically what you make working full-time year-round at 2 or 3 times the federal minimum wage. So these are people working fairly decent jobs who simply can't keep pace with housing costs. And even still, people making upwards of $75,000. So I think as we talk about solutions to the rental affordability crisis, there's the lowest income households, and we have to talk about how to deliver subsidies because the private sector can't do it. But increasingly, this is a problem of middle income people. And there's just not enough subsidies to go around. And there's every reason to believe the private market should be able to provide housing they can afford. So let's talk a little bit about what's driving these trends. This is a very simple chart, but the bottom line there, the purple line is showing you the change in real renter median income going back to 1960. And you can see by 2016, they're roughly up 10% in real terms from where they were in 1960. Not much gain in income. The top line is showing you what's happening in real median rents. Those are up 70%. So there's 60 percentage point gap in what's happened to incomes and what's happened to rents. So this is a pretty substantial increase in housing costs over a long period of time. If we think about how do we address this problem, again, it's at some root an income problem. So if incomes had grown at that same rate, we wouldn't have this housing cost problem for the most part. But we do have that income problem. So the question for us on the housing side is what do we do to bring that cost line down? And so understanding a little bit about what's driving that cost line, one thing is if we look at the cost, I'm using here single family housing, even though I think we're mostly talking about rental housing today. The top line here is showing you the change in a Census Bureau measure for a new house over time, and show you that new house sold for $155,000 in 1963 and $382,000 by 2017. But this census series breaks it down into how much of that is due to a constant quality house changing in value versus other things about the house. So the bottom line here, the darker line, is showing you if we hold that house constant, so the same little house we built on the same little piece of land in 1963 we built today, it would cost $208,000 to build. So that's a gain of about $60,000 or $53,000 over that period of time in real terms. So there's some growth, but the biggest growth has to do with the change in quality and the cost of land. So there's 3 big factors here. What does it cost to produce in that house? How big is and how high quality is that house, and what's the cost of the piece of land it's sitting on? If we look at land prices, this is a map showing you the change in house prices just from 2012 to 2017. Those dark orange and purples are places where house prices have gone up by more than 50% or more than 100%. And so land has become increasingly pricey. So one of the factors is how do we make better use of land? And that gets us back to the question of density. If land's going to be, a piece of dirt's going to be that expensive, you're going to have to put more housing on it to divide that cost up among more units. And then the last point is just the productivity. This is a chart I've stolen from the McKinsey report that I'm sure you folks have all seen before. Your listeners have probably seen before too. But just the fact that on the right-hand side, the productivity gains of the construction sector have been just abysmal compared to other sectors of the country. So if we're going to address the affordability problem, we're going to have to build smaller, simpler housing. We're going to have to make better use of land, and we're going to have to find a way to produce it using ways that are more productive than the ways we've been doing it up to now. So let me do this last slide I'll put up here just to anybody's interested. Our website, www.jchs.harvard.edu, lots of reports and data. And then you can follow us on Twitter at Harvard_JCHS. So that's my little ad that I snuck in there. But let me stop sharing and come back and we can chat about this.
Thanks, Chris. A lot to unpack. Very, very efficient set of slides. Good data, good clarity. Really, really appreciate that. And it's interesting, just as a comment, I know the last slide you showed from the McKinsey report is from the 90s, but there's data that they looked at since the 1960s. And it's very interesting how much the late 60s, early 70s aligns as a transition point in all kinds of indicators. And so actually the deindustrialization of construction, we could say, starts around late 1960s, early 1970s. And it gets worse in the 90s, but the simple fact that actually contractors are replacing replacing machines with labor, and replacing high skilled labor with low skilled labor. So there's a real alignment, and it seems to have happened. A lot of that seems to have been expedited in the 1970s, where there was obviously the energy crisis. It was a sort of very difficult, seems like an extraordinarily difficult moment for construction industry. And it seems like that certain habits in terms of development and construction were formed in the 1970s. I don't know if we understand them well enough, but all this data points to this kind of key moment where every time since then, when there's a downturn, we've seen a further deindustrialization, further deskilling during the downturn, and then a return, which there is some construction, but there's not a return to the same productivity. And I'm just wondering, as an economist, I mean, this is something and so McKinsey has pointed to offsite construction as a technological solution, but it sounds to me like it's a bigger problem than technology. It sounds like a management, policy, even a sort of financial problem. That technology alone, as much as we're advocates for offsite construction, is going to have a role to play in, but may not be the only solution. But maybe can you comment on that boom and bust cycle a little bit and how those relate to the housing and construction and the numbers that sort of relate? They seem to overlap in ways that seem pretty important.
Right. As an economist, what comes to mind is what's the cost of these different factors, right? And so if you point to the 1970s as a period of time when this shift away from capital towards labor happened, what was happening in 1970s? 1970s was when the baby boom generation was coming of age, right? And so you had this enormous wave of labor, right? And so from the 1970s into the 1990s, you had this period where labor was probably a lot cheaper than capital at that point. And interest rates were through the roof, right, in the 70s and the 80s. And so the cost of capital was going to be a lot higher, and labor was plentiful. Come into the 1990s, the baby boom generation's getting older. They were probably going to start to see some labor impingement, but we have an enormous wave of foreign immigration, right? And so what fueled the housing boom from the 90s into the first part of the 2000s was a lot of cheap foreign labor. There's a lot of workers from Mexico coming across the border who could frame, who could sheetrock, who could do a lot of that, as you said, unskilled labor. And as we've come out of the 2008 crisis, one of the reasons why housing construction has lagged, that people, I'm sure you heard from everyone, right, is that labor is in short supply. And it's in short supply because the baby boom generation has gotten older. It's in short supply because the millennial generation is much more highly educated than previous generations. And so there's more people going to college, fewer looking for kind of entry-level manual jobs. And because immigration flows have dramatically shifted. And that's, I think that labor shortage is not an unimportant part of the story, that a lot of what's driving people towards industrial production now is not just cost, it's the fact that they can't find workers. And there's, again, in many cases, what they're doing too is substituting unskilled workers for skilled workers, right? They're being able to use a factory condition to use unskilled workers to do what would be union jobs on site.
It's really helpful, Chris, to understand sort of that context of labor and capital amidst the housing production. Helps to clarify some things that we've had hypotheses about, and I think we should further unpack those things. Next, kind of a maybe final question for you related to the current situation, and I hope you have an opinion about it. The hubbub on LinkedIn and in online conferences, since we can't get together right now, is the cost of material, in particular lumber, and the impact of that cost on housing affordability and production. Just read a post this morning from a good friend, Vaughn Buckley, who has a vertically integrated company that delivers multifamily housing, has a factory, has a design office, and has a general contracting firm. And there was a discussion about leveraging automation and to replace labor, leveraging machines to replace labor in factories. And his point was that amidst the current material procurement crisis is what he calls it, that we're under, he does not see the ability to invest CapEx in machines. In fact, they're deciding to put it, into the factory in their operations and streamlining their processes and other means. And until that material cost comes down, they don't see the ability to continue to invest back into their companies. And so this is a real challenge that is being faced. Certainly, McKinsey says, go to manufacturing, get automation, de-skill, use the context to your advantage. But the context has changed in the last few months. And so I wondered if maybe you had an opinion about how that might impact us long-term based upon past precedent, or just based on your gut.
So in essence, that the high cost of supply, material inputs, is draining available resources to invest in plant and equipment.
Yeah, or productivity in general.
Right at the moment where at the first moment where we're even starting to talk about this in the US, unfortunately, now that capital that might have been able to go into the mechanization side, which we really need, now is going really to the cost of lumber.
Right. Well, the lumber prices are enormously cyclical, or I'm not sure what drives their cycle might be as much import issues and wars as anything else. But this is not the first time we've seen lumber prices spike, and certainly, so it does create this kind of volatility in the industry. I mean, I guess I wouldn't. My expectation would be that this is not going to be a permanent change in lumber prices. They will come down. If that's what's driving this inability to spend now, that condition will be removed. And I think underlying that is just very strong demand for housing right now, which ought to be more important in the sense of providing that consistent demand that you need to support that investment. So I don't think it's, I guess I wouldn't see this. I mean, it may slow down the progress, but it's not going to stop the progress. And really what we need is, my understanding is that for heavy investments in capital, you need to have a much more consistent demand to be able to cover those costs of capital. When you have a heavy labor work production method, then you lay off the workers when demand is slow and you cut your costs down. But when you got a factory you got to support, you can't do that. And what you need to have then is more consistent demand. So the context we've been in for the last 15 years, where demand has been highly constrained, our supply has been highly constrained, is one where, despite the fact we had this enormous economic dislocation from the pandemic, we're seeing housing demand strong, and there's no excess vacancies. And so there's really, as you look out, you should see strong demand going forward. So hopefully I would think that would provide investors, owners in these sectors to say, I have the confidence to make these investments because I'll get a return, a consistent return going forward.
But the lumber, it seems also, and this is, the lumber issue a little bit, I had a student looking at this, the lumber issue is that, like a lot of things in U.S. construction, the cost of, or in the U.S. economy, the cost of fuel that we have is highly subsidized. We don't see it. If we paid European costs for fuel, this country would, turn into revolution. The cost of lumber is actually, when you compare it to other countries that are wood-based, has been really low. We pushed it, and it's been low quality too. It's interestingly enough something we've seen as a barrier to automation. The tools that you need to increase automation require a higher grade of lumber. Ironically, now the cost of a low-quality lumber in North America is about what the cost of premium lumber from, let's say, Sweden, which is a kind of lumber that you can put into machines. They've sort of evened out. So there might be a silver lining in that. Inadvertently, it will finally force the supply chain to take that quality seriously, the same way that we've treated labor in construction. It's the same way we've treated housing in general in construction. Maybe I wanted to ask just a general thought too, that something we've seen in our work in Minnesota is the alignment between offsite construction and some of the new inclusionary zoning changes, particularly the way that offsite, particularly modular construction, three-dimensional modular construction, helps deal with suburban densification, particularly through the way that it sort of has less of an impact on neighborhoods. You basically get construction done faster. Is that another area that this kind of alignment might occur between this technology, this method, and some of these social needs that we're seeing?
Yeah, it sounds like I hadn't heard that or heard that kind of line of argument, but absolutely, I think, in my kind of preface, the story I told at the beginning, I was focused on these moderate income households that the private sector could serve. There's no reason why it can't also be affordable housing too. But and so I think in California, there's been a number of cases of light tech and other developments where the kind of cost per unit has been brought way down. But in addition to the cost, the question of disruption and the like is certainly another way to kind of reduce opposition to the construction. And you both will speak to this more, but I think there's a reputation of offsite construction, modular housing as being cookie cutter, not attractive. And so I think the other thing would be, as we get more experience putting this housing in, if people see it and they realize that aesthetically it's good quality as well, that will also help acceptance. Because that's, as much as NIMBYism is about traffic noise, whatever, it's also about what's the impact going to be on my property.
Value.
Well, thank you very much for coming on, Chris. We'll put some links under the YouTube post to your center and some reports. Thank you for coming on, Chris Herbert, Managing Director at Joint Center for Housing Studies at Harvard. Thank you.
Great to be with you.